So Cathie Wood recently shared how government statistics don't show how weak the economy truly is. In fact, if we log into x.com, we see this tweet from Cathie Wood showing that government statistics do not seem to be capturing how weak the economy is. Many companies are reporting shockingly weak revenues. She goes on to say that USPS US delivery volume growth is worse today than in 07 through 09. And so her tweet shares this chart over here showing how the difference between 2021 to 2023 is much wider than the difference from 2007 to 2009. She goes on to say that US employment is strong simply because of labor hoarding after 2 years of vacancies, which if anyone remembers the time during the pandemic, everyone was hiring because nobody wanted to work. But she continues to say that if we are right that prices are about to unravel and crush margins, then companies will be forced not only to lay off excess labor, but also to harness AI and other automation to solve its margins, in which Elon Musk responded to this tweet thread saying, "Interesting." Now, in the past on this channel, I've shared a similar concern to Cathie Wood about the idea of a slowdown in the economy as we go into 2024, specifically for the first and second quarter. In fact, I shared this chart in the past on the channel, but I want you guys to pay attention to this. See, this is the truckload line haul index, and essentially it provides a measure of market trends and line haul rates, and it helps us kind of understand a little bit about the market dynamics. And so when there's a higher volume, that suggests that there's greater demand for shipping services, which could kind of indicate a robust economy, versus a lower demand or a lower value suggests the opposite. But there's still some nuance when we're actually taking a look at this data that we have to kind of understand and put into context before we automatically assume that things are going to be worse than 2009. I don't think things are going to be worse than 2009. I think there is going to be a slowdown, but we kind of have to understand a little bit more of the context, like I said. For example, when we take a look at this chart, we see that there was a huge spike up in 2021, and then in 2022, that's when we saw things kind of stifle downwards. Now, one of the things we have to understand is that everything went up in 2021 because we had an influx of capital going into every single American's bank account pretty much to go out and spend money. Everyone was forced to lock down and stay home, and so everyone was ordering online, and of course we saw this huge uptick. But of course, once rates started getting increased, we started to see some slowing down in ordering products online, and right now we're kind of back in trend where we were back in 2019 before the pandemic. So things aren't worse than where they were back in 2009. However, I believe that we're most likely going to continue to see a slowdown in the economy, especially because one of the things we have to understand is that it takes time for these federal fund rate hikes to actually bleed into the economy. So we still have some more pain to go. And I believe that Cathie Wood could be correct on this about like a lot of these companies laying off more individuals, and pretty much the labor market is what's been holding us away from entering into a recession. Because of course, once people lose their jobs, they can't spend money, and of course that bleeds into corporate earnings. This was one of the reasons why when Tesla stock recently sold off after its earnings, it started bouncing up a bit. I said, no, I'm still not comfortable with buying Tesla at these price levels, and we ended up seeing Tesla kind of fall down a bit further. But just because I'm not interested in Tesla stock at these particular levels does not necessarily mean that I'm not bullish for Tesla in the long term. In fact, I still am quite bullish for Tesla in the long term. And one of the reasons why I want to share it with you guys is this article we got over here from the Wall Street Journal. Now, no, before you guys question me, yes, I still get the newspaper. I like reading the newspaper, okay? Yes, I know everything's digital now, and I have obviously the Wall Street Journal and several other news media outlets online, but every now and then I like to read the newspaper, and there's this article right over here. And it kind of lets you know that Tesla is still, and EVs in general, are still in the trend or going upwards. In fact, one of the things that it kind of outlines is the fact that a lot of local states and local governments are concerned about the accelerating pace of EVs, because here's the thing. A lot of these local governments and these states, they fund the infrastructure for the roads and raise capital by imposing taxes on gas. But since more and more individuals are buying EVs, and they actually believe more individuals are going to continue buying EVs, they're worried that they have to do something now to ensure that they could still have capital to, fund the infrastructure for these roads. And so what they're considering with this article kind of talks about is either hiking, taxes on gas, and on top of that, raising the prices to register a new EV. Maybe in the future you could pay a couple of $1,000s, just to register a new EV, as well as just a couple $100s every single year annually. So of course, even if the government does do that, well, we know that we're still probably not going to have the best roads, because we just know how government operates, right? You could raise money here and do this and charge all these fees, but at the end of the day, we're probably still going to get a pothole on the road, and the roads are still going to be trash and disgusting, because that's just how government operates. But the point is that there's concern from local governments that EVs are going to continue growing, and they have to do something about it now, which is why, again, this article pretty much tells me that, hey, things for Tesla in the future are going to be good. Despite things right now not looking that good, in the future, Tesla is going to be a driving force, especially because they still hold a huge market share for EVs. But with that said, I want us to go ahead and hop into my laptop. This way we could just take a closer look at what's going on with Tesla stock, as well as cover some topics going on with the overall state of the economy. But before we go ahead and hop into my laptop, if you're brand new to the channel, make sure to tap that subscribe button. This way you don't miss out on any future uploads. And I'm doing something very unique for this video, where every single person that hits the subscribe button on this video equals an additional treat for my cat Mochi. So if you guys like cats and think Mochi is adorable, then consider tapping that button. But also make sure to check out the links in the description of this video as well, and also in the pinned comment section below, as there's going to be a link for my free weekly market post insights, where every single week I send out an email talking about what's going on with the overall markets and things that we should be aware of as a market participant. And again, guys, it's completely free. But with that said, let's go ahead and hop into my laptop. Alrighty, so we are officially in my laptop taking a look at Tesla stock, and as we can see, there has been quite a bit of selling taking place. In fact, this is one of the biggest red candles that we've seen in quite some time, and this kind of is in sync again with what I've shared in previous videos on how, despite Tesla stock selling off quite a bit from its recent earnings report and showing like signs of a slight bounce over here, I said that I wasn't too comfortable paying these high multiples for Tesla to average into my long-term portfolio, despite Tesla bouncing up from these levels last time. And that's exactly what we're seeing. We're seeing more selling pressure take place. And so I want to just quickly cover what I expect Tesla to start doing in the next coming few trading sessions, as well as like the outlook for Tesla, and kind of just tie it back in tune with what Cathie Wood has recently been sharing on X.com. And so one of the things I've recently shared in previous videos, and also with the Push for Profit private group, is how basically we're seeing a lot of selling pressure take place, not only with Tesla but the overall market, simply because of tax loss harvesting, which is a strategy that a lot of these institutional and investors do in order to offset their tax liability. It includes a lot of selling pressure, and we know that a lot of these bond funds and these mutual funds, they end their fiscal year on October 31st, and so that's pretty much ending soon. And so I believe that there is going to be some sort of relief for Tesla stock in just a few, in the near term, but it's going to be a very short term type of relief. I don't expect Tesla stock to all of a sudden start going upwards and break this descending trend line. I still believe that there's actually more selling to take place for Tesla in the longer term, but I'm still bullish on Tesla going into 2025 and 2030. And I know that may seem a bit odd, but I'm going to go ahead and cover that now. First off, before we go ahead and talk about the technicals for Tesla, I want to talk about some of the economic events that we're seeing unfold this week. For example, we have the Chicago Business Barometer taking place, consumer confidence, ADP employment, job openings, ISM manufacturing. I mean, there is a ton of data coming out. But I believe the biggest catalyst event for this week is going to be Wednesday, November 1st, when we had the Federal Reserve update their decision on interest rates and what they're doing with monetary policy. Now, we know that the future markets are already pricing in a 98.2% probability that the Feds are going to pause. And this is actually in sync with what I've been telling the Push for Profit private group for months now, that I believe that the Feds are most likely going to pause, as it takes time for these rates, like I said earlier in this video, to actually impact the economy. And so they need to pause because there's still much more that could that still hasn't hit the economy. And so hiking it would just be a disaster. And so if we do get some abrupt or all of a sudden different decision from the Federal Reserve, well then yeah, that could cause some more weakness, but that is very unlikely. It's more likely that they're going to be pausing. And so does that cause relief relief for the overall markets? No, it's not that pause that causes the relief. It's really going to be the tone or the rhetoric that we get from Fed Chairman Jerome Powell after the press conference, because we know that we get the decision on monetary policy at 2 p.m., but then we always get the Fed chairman giving a speech afterwards. And so this is pretty much like an earnings report with a company, right? You get the numbers for the earnings of the company, and then you hear the earnings call. And so that's how you want to treat the Federal Reserve, decision on interest rates. And so I believe that we're going to be seeing some relief, as we know that, again, there's been quite a bit of selling for Tesla stock. We know that selling just doesn't continue. Of course, there's going to be a little bit of a break in the pattern. So we may see a little bit of relief, again, alongside with the decision on monetary policy. But this relief is not something that I feel comfortable still adding into my long-term portfolio as a long-term investor. It may be great as a trader. So in my trading account, I may take that as an opportunity to trade Tesla going upwards. But I still believe there's more pain coming for Tesla. Now, looking at it from a technical perspective, one of the areas that I've been highlighting for quite some time is around this $180 level. I know some individuals are actually mentioning Tesla to fall down even further below that to this $145 area. But before we actually hit that area, I first want to see how Tesla does around the 180, because of course we have to see what ends up happening at around this price action before we actually continue moving further down. And so if we do hover around the 180, of course the next idea is, does it break below it or does it actually bounce from there? And so obviously I don't have a crystal ball, but from what I see going on, especially when you look at the data, things are not looking good. It looks like the economy is slowing down, although I don't believe it's as worse as 2009, but we still don't know yet. The thing holding up the markets are the labor markets and, people being employed. But as Cathie Wood suggests, that we're most likely going to see a lot of this labor hoarding start stifle down, and we're going to see individuals most likely lose their jobs, which could trigger more of a recession. I know the Federal Reserve has been trying to spin this narrative of a soft landing, but that idea is not something that I actually align with. I'm kind of more in the side with Cathie Wood that we're going to see a bit of a recession before we actually see stocks like Tesla do well in the long term. And of course, Tesla can't do well in terms of what Cathie Wood has been saying about the AI play, because of course FSD is still not out there. And so just looking at Tesla from more of the auto side of things, I believe that, as we heard from Elon Musk's recent earnings call, that it's going to be difficult and challenging. And I believe that as we move into the first 2 quarters of 2024, it's going to be a challenge for Tesla. However, afterwards, once we finally get the economy back to its bottom and we have the Federal Reserve start cutting rates again, that's going to be a good opportunity for Tesla. And of course, I'll let you guys know if you're subscribed to the channel or if you're part of the Push and Profit private group, where I believe is a good idea for me to go ahead and add into my long-term portfolio, or I'll let you guys know what I'm doing. But of course, you should never just copy what I'm doing in regards to a trade or an investment, or anyone else, not me nor Cathie Wood or anyone else you see on YouTube or X.com. At the end of the day, you only have to trade or invest in whatever you see value in, and not just blindly copy what anyone says. But I want you guys to know, or let me know in the comment section down below, what are your thoughts about, us going into a little bit of a recession? Do you agree with Cathie Wood that, economic data is actually far worse than what's actually being illustrated? And do you believe that she's right that, the first 2 quarters are going forward are going to be difficult? I'm more on that side, but I'm curious to hear your thoughts on that. And with that said, make sure to watch this video right over here. Or if you guys are interested in real estate, make sure to check out this video right over here. And I'll see you guys on those next videos. Take care, guys.